Disparities in development of insurance market across Africa have created immense challenges for companies trying to do cross-border business in insurance and bring the benefits of scale to customers across Africa. In particular, sector experts point to the differing regulatory requirements across different markets as a major factor that may be holding back growth in cross-border penetration on insurance. KTN's Peter Wakaba seeks to find out what efforts are being made to tackle these issues across the continent.
The growth of cross-border businesses across Africa continues to present a major challenge for insurance companies that are working to serve such clients, as there are glaring differences in the penetration, quality, and adoption of insurance by individuals and businesses across different markets. In markets like Kenya and South Africa, penetration is relatively higher than much of the rest of Africa, while regulatory practice is more advanced and in line with global standards.
Kenya, for instance, is quite ahead of time, meaning our regulation is also a little bit ahead of others. So when you look at the cross-border or the multiple jurisdictions, you find you don't have homogeneity in the way regulation is happening.
This became apparent during one of East Africa's largest insurance sector deals in the year 2024, where Hollard International, a Pan-African insurer, announced the acquisition of a 20% stake in Apollo Investments, the parent company of APA Insurance.
We are finding it very difficult in Tanzania, for example, that we cannot go into shareholding of companies because of the local laws and the regulations. We feel that all the countries that we are in, Kenya, Uganda, and Tanzania, despite having a similar community, East African community, we have very different rules.
Hollard, with operations across 7 other African countries, became the second international investor in the Kenyan group, following Swiss Re, which acquired a stake in the year 2014. What are the challenges that you face operating in different markets? Ashok talked about the differences in regulation and that sort of thing.
I think a lot of these countries operate quite independently of each other, but I think recently what we have started seeing is that regulators are talking to each other.
The markets, however, continue to evolve in progressive fashion, meaning that the challenges continue to diminish.
Yes, so regulators, insurance regulators in East Africa, we've actually been meeting to address that issue about how we can harmonize our requirements in the region so that we have a situation where if a company is licensed in Kenya, they should be able to freely do business in another country in the region and vice versa.
Insurance sector players, though, continue to take the bull by the horns to build capacity across the region themselves, including proactively engaging with the regulators.
So I can give an example with what we call risk-based supervision. You find Kenya adapted this quite a while back from the insurance industry perspective, but banks had already adapted the same earlier at the solvency requirements. So if you look at other jurisdictions, they are still struggling. And what we are doing is when we host these multiple seminars, we are also trying to create awareness of that. Because at times, because of this lack of uniformity, you may find our clients may not understand why we are doing what we are doing. So making them understand that we are not at par, but we can bring them up to speed is quite important.
We actually have a draft bill in place at the ESC. It's called ESC Insurance Bill, whose aim is actually to enforce that. And it's actually, I think it's at the YALA stage, it's way to be enacted.
If such efforts and others then continue to bear fruit, this might just be the catalyst that is needed to continue to drive up uptake of insurance across Africa. Peter Wakaba, KTN News.
Right now, traders in